Welcome. In this video, when is Zbcn coin bullish coming? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. A descending trend line formed by connecting two significant peak points represents a highly critical structure in technical analysis. The line drawn between these two peaks illustrates the selling pressure and downward bias the price has historically faced, serving as a ceiling or resistance level for the market. In the past, every time the price approached this area, selling intensified, the price declined, and bearish pressure regained control. However, things appear to have developed differently this time. The price has broken through this descending trend line, meaning it has managed to overcome the selling pressure previously represented by that line. This is a very positive signal in terms of a potential upward move and is one of the first signs of a possible trend reversal. One key detail that investors should carefully monitor following such a breakout is whether the price returns to test the broken trend line. This return is known as a retest in technical analysis. A retest is a critical step where the market tests whether a former resistance now functions as support. If the price revisits this trend line and bounces upward from it, it confirms that the line has become a support level and that the breakout is valid. In other words, the market accepts that the previous downtrend has come to an end. In this scenario, the price has successfully moved above the descending trend line formed by connecting two peaks and is now pulling back for a retest. This is a very constructive behavior from a technical perspective. Such breakouts followed by a retest provide safer entry points for investors looking to join the trend and indicate that the upward move is based on solid ground. These kinds of setups often generate strong signals for continued bullish momentum. If the retest is successful, meaning the price bounces off the trend line and resumes its upward movement, this suggests increasing confidence in the market, strengthening buyers, and the potential for acceleration in the uptrend. Trend lines in technical analysis reflect the psychology of market participants. A price trading below a descending trend line suggests that the market remains pessimistic and investors are not confident in upward moves. However, breaking above this line reflects a paradigm shift and a change in investor sentiment. The market is now pricing in an upward movement rather than a decline. These breakouts are often supported by volume, and breakouts with high volume are generally healthier. If the breakout above the trend line is accompanied by rising volume, it indicates that the move is real and not a false breakout. A subsequent retest reinforces the notion that the line is now accepted as support by investors. This technical setup also forms the basis for many algorithmic trading strategies. When a descending trend line is broken and the price tests it as support, many algorithms and bots interpret this structure as a buy signal. Therefore, it is common to see rapid price increases following such retests. This is a natural cycle within the market and a scenario frequently encountered by traders who use technical analysis. The successful execution of this scenario suggests that the uptrend is being supported not only by technical signals, but also by a shift in market psychology. Another factor to consider is how deep the retest might be. In some cases, the price may continue its upward movement without touching the trend line exactly. In such cases, it would be incorrect to say that no retest occurred, as the majority of investors consider even a close approach to the trend line as a valid test. However, in more traditional and conservative analyses, a direct touch of the trend line followed by a bounce is expected. A green candlestick or a volume-backed upward move from this point provides investors with confidence that the uptrend is starting. Breaking above a descending trend line followed by a successful retest often sets the stage for a rapid price movement in the short term. Investors who previously sold below the trend line or missed the opportunity to enter positions may decide to buy after seeing the breakout and retest, increasing demand and accelerating price growth. At the same time, such technical patterns are often discussed on social media and investor forums, which naturally draws more attention. The reason technical analysis works so powerfully in the market is because many investors are following the same patterns and reacting to the same signals. This causes technical setups to become self-fulfilling prophecies. The price breaks the trend line, investors interpret it as a buy signal, buying begins, the price rises, and this rise attracts more investors, creating a chain reaction. Therefore, descending trendline breakouts and subsequent retests are considered highly critical structures where market psychology shifts and enters a new cycle. In conclusion, the price breaking the descending trend line formed by connecting two peaks and then returning to retest this line is a sign of a significant transformation in the market. This structure is regarded as a strong bullish signal in technical analysis. If the retest is successful and the price bounces upward to continue its movement, it shows that the uptrend is based on strong fundamentals. This breakout is not only a technical structure, but also a reflection of improving investor sentiment. For this reason, such patterns can signal both short-term buying opportunities and long-term trend reversals. The fact that the price is forming the structure and generating positive signals gives investors strong confidence and increases expectations that the uptrend could be more sustainable. But we can't base our analysis on trend lines alone. Let's also look at other metrics. Stay tuned. I'm interrupting the video for a moment, friends, because BitTuneX Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description. In technical analysis, one of the most closely monitored elements in the markets is resistance levels. These levels are known as areas that have previously halted or slowed upward price movements. Resistances are formed as a result of investor psychology, the supply-demand balance, and prior price action. In the current chart setup we're analyzing, there is a clearly defined resistance zone being tested by the price. This level has historically been a point where the price struggled to advance, reacted multiple times, and encountered increased selling pressure. This resistance level has become a key area closely watched by investors and could signal a significant technical shift if broken. The price approaching and currently probing this resistance level, touching it multiple times and attempting to move higher, is a notable development. This behavior indicates that the market is seriously testing the level and preparing for a possible breakout. Repeated tests of a resistance level are generally considered a bullish sign, as it suggests that sellers are weakening while buyers are gaining strength. If sufficient buying pressure, backed by volume, builds at this level, the resistance could be broken, and the price may move strongly toward previously unreachable levels. When a resistance level is broken, this breakout typically signifies that the price has escaped a consolidation range. Such breakouts are often accompanied by increased volume, because technical traders react to them by entering positions. The current price point is therefore of critical importance. If the price manages to break through this resistance zone decisively, the uptrend may accelerate, the technical outlook could turn fully bullish, and new targets may emerge. This type of move builds confidence among investors and also draws the attention of momentum traders and short-term speculators. Possible scenarios following a breakout of this resistance are quite promising. First, a breakout may trigger a new wave of upward momentum. This wave can improve technical indicators, positively influence investor expectations, and boost market confidence. After breaking resistance, the price often accelerates toward the next resistance area. This is a strong technical signal that the price may reach much higher levels in the medium to long term. Especially in a bull market, resistance breakouts can often result in very sharp and fast upward movements, offering significant profit opportunities for investors. Breaking through a resistance also means overcoming a psychological barrier. Since this level had previously been a common selling area for many investors, those sell orders become ineffective once the level is breached. At the same time, investors who are previously hesitant may feel more confident entering the market after seeing the breakout. This can trigger a new wave of buying, further accelerating the uptrend. In addition, investors who previously sold at a loss near this level may choose to re-enter the market, supporting the upward movement. The fact that the price is currently testing this resistance level indicates that there is pent-up energy in the market looking for a breakout. In technical analysis, such levels are often referred to as decision points. At these points, the price either breaks through resistance and moves higher, or gets rejected and undergoes a short-term correction. However, based on the current data, the price has tested this resistance multiple times, and buyers are increasingly asserting control. This strongly increases the likelihood of a breakout. In this scenario, the first target after an upward breakout is typically defined by chart patterns such as cup and handle formations, inverted head and shoulders patterns, or Fibonacci projections. If such formations are also present in the chart, it becomes highly likely that the price will move toward those technical targets. Additionally, a visible increase in trading volume after the breakout supports the sustainability of the move. Since breakouts without volume are often false, investors should pay close attention to this detail. A breakout from resistance is not only significant for short-term traders, but also for long-term investors. When the price clears a level, it means that level is now in the past and a new trend has begun. This gives investors the confidence to think long-term and increase their positions. Especially when a breakout occurs alongside a chart pattern, it generates more reliable buy signals on the chart. Therefore, this breakout not only provides a technical signal, but also creates a positive sentiment in the market. In conclusion, if the price breaks through the resistance level it is currently testing, a new bullish scenario will unfold. This scenario is supported by both technical indicators and price behavior. The price is consolidating near resistance and upward pressure is increasing. If this level is breached, it is reasonable for investors to expect the price to move toward new targets. For this reason, this resistance level should be closely monitored and appropriate strategies should be developed once the breakout occurs. When market participants view such breakouts as opportunities, they can trigger new waves of buying and potentially drive the price to previously unseen levels.
The MACD indicator is one of the most frequently used and reliable signal providers in technical analysis. This indicator is particularly effective in identifying trend reversals, understanding momentum direction, and guiding investors in making buy-sell decisions. An upward crossover in the MACD, when the MACD line crosses above the signal line from below, is generally interpreted as a sign of a positive reversal in the market. For investors, this is perceived as a bullish signal, and many traders use this crossover as an opportunity to enter long positions. This upward crossover can be a strong starting point for both short-term and long-term investment strategies. The MACD indicator is composed of two exponential moving averages, one shorter term and one longer term. The difference between these two averages creates the MACD line. Corresponding to this line is the signal line, which is a 9-day EMA. The interaction between these two lines allows for crossover analysis. When the MACD line crosses the signal line from below, it indicates the beginning of an upward trend. This crossover suggests that bulls have taken control of the market and momentum is turning positive. As a result, investor interest increases and trading volume may rise. This crossover usually occurs when the price is near bottom levels. After consolidating at lower levels, the MACD starts to move upward and crosses the signal line. This indicates the early stages of a new trend. Therefore, the crossover provides investors with a valuable early signal. Taking a position at the beginning of a price move can lead to significant gains as the trend continues. If such a crossover is supported by other technical indicators, such as an uptrend on the RSI, increasing volume, or a breakout from a chart pattern, its reliability improves, giving investors greater confidence. The upward MACD crossover is significant not only as a technical signal, but also from a psychological perspective. Many investors monitor such technical signals with automated systems. As soon as an upward crossover occurs, not only retail investors, but also algorithmic trading systems may activate. This can cause the price to rise more rapidly as many buy orders are triggered simultaneously. Such chain reactions can accelerate the upward movement. Especially when these crossovers occur after low volume consolidation periods, the resulting rallies can be stronger and more sustainable. Additionally, the MACD histogram provides valuable insights during this crossover process. The histogram visualizes the difference between the MACD line and the signal line. When the MACD histogram turns from negative to positive before the crossover, it confirms a change in momentum. A crossover above the zero line on the histogram signals that the price may enter an uptrend. Therefore, the upward MACD crossover in the indicator should be supported not only by the line interaction, but also by the behavior of the histogram. Growth in the histogram shows strengthening momentum and supports the upward movement in the market. This helps lay a solid foundation for long positions. Another important factor is timing. MACD signals are generally lagging indicators, meaning they appear shortly after the price move begins. However, the upward crossover is strong enough to compensate for this delay, as the trends that begin after such crossovers often continue for a considerable time. This gives investors enough time for the price to move in their favor after entering a position. Especially on higher timeframes, MACD crossovers are more meaningful. On these larger timeframes, upward crossovers indicate more stable and long-term trends that are not affected by short-term fluctuations. The MACD upward crossover signal yields better results when used in combination with other technical structures. For example, if a cut pattern completes and the price breaks out while the MACD also shows an upward crossover, the signal becomes significantly stronger. When investors see such a setup, they tend to enter with more confidence because the pattern and momentum are aligned. Similarly, if a downward trend line is broken and a MACD crossover follows, it is seen as confirmation of the breakout, suggesting the price may enter a strong upward move. At this point, the risk-to-reward ratio becomes very favorable as positions are opened early in the signal and significant profits can be made as the trend continues. Of course, not every MACD crossover results in success, but the success rate is quite high. During sideways market conditions, such crossovers can be misleading. However, once the market establishes direction and begins to rise, the MACD upward crossover becomes one of the most important tools to confirm the strength of the trend. Therefore, when using MACD crossover signals, investors should also consider the overall market structure, volume, other indicators, and price formations. This makes the signal much more reliable and helps make more solid investment decisions.
In conclusion, an upward crossover in the MACD indicator is a positive development from a technical analysis perspective. This crossover is considered a strong signal that prices may be entering an uptrend. Especially when supported by other technical signals, it can offer significant profit opportunities to investors. For this reason, such a crossover is a technical structure that should be closely monitored and carries strong bullish signals. The signal provided by the MACD is not just about one line crossing another, it is a concrete expression of a shift in market direction, rising momentum, and improving investor sentiment. Therefore, MACD crossovers play a critical role in technical analysis and rightfully deserve a central place in investment decisions. We should wait for the MACD crossover.
Yes, friends, I hope you like the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.